All right, Scott, let's get in the trenches here. I want to go to gold and silver in particular because gold is that good fear gauge, so it's kind of interesting to see how that holds up versus the markets and what that really means. You know, hit an intraday low today already of 1491, breached that 1500 level, but hasn't had a close below it. And I know that 1500 is a key psychological level for a lot of investors and traders, but I know the support's at 1480. So is there a trade around here? How are you absorbing this 1500 area?
Well, I think there has been a trade, and if you did put on that short, it's time to cover a little bit. But I don't think you need to buy it so quickly. If you look technically, remember on Fed Day we talked about this push-through failure. It tried to push above this resistance. These are the GLDs. Push-through, close below is a bearish sign. A lower high to the last time we reversed. So a lot of people that were trying to be long got out. Some actually made some money trying to get short here. You had a nice gap down, held the support short term, and then we broke again on Friday. I do think I see some support here in the GLDs around 144.90, but I do think ultimately this could get down to the 100-day moving average, which is around 143. The time to have been short here, maybe there, this is a time to be covering and maybe looking for long in this zone if you sold it correctly.
So you wouldn't be shorting down from the 200 level?
No, I think that if you were short already, good job. You caught that reversal, cover into here and look for a better long. But right now, gold is telling us it's like a lot of mixed signals. You're the best in the business on the gold reporting side, and I've been trading it. And at this point, you know, it seems as if the euro is telling us we're going to get some kind of hard break or some kind of credit event where the euro gets crushed, dollar goes through the roof, and you know gold doesn't typically like that. But then on the other hand, right, if Greece leaves the union, they start following.
Or there's a default of some sort, then there's going to be some safe haven buying, which is what I'm hearing is what level does gold go to until it finds that physical support then being safe haven buying.
Right.
So I have to see how that plays out. But I also wonder if the portfolio managers might be selling gold to book some profits, to show their clients, hey, I made you guys some money, because gold is up, over 4% for the quarter versus oil, which is down 16% for the second quarter. So how much of that is playing into it? Because that's exactly what the reverse is what we saw at the end of the fourth quarter of 2010, which is why we had a huge spike up to new highs, was because they wanted to show they owned it. Now I feel like it's the reverse. Would you agree?
Yeah, there could be some pressure there. That's why it's such a tricky time when you come into the end of the quarter or you come into the end of the half of part of the year, because you don't know what the true move is here. You don't know what kind of shenanigans are going on behind the curtain there. So for now, we have to watch price. The time to have sold it, the time to have shorted, I think happened. Now's the time to cover, and now's the time to wait and see. And if you do have a long-term gold thesis and you sold into the excitement or you sold on Fed Day, now's the time to get excited, to buy the dip, to get back in because you deserve that new entry since you sold it well.
And silver is around $34. I mean, is it seeing some healthy consolidation? Because the band I see is 33 to 38. It's really not breaking that.
I think silver has just been like a non-event. Ever since that parabolic move, that exhaustion top, it's been just chopping around in this lower end. And typically this is bearish. If you look at the chart of the SLV, which a lot of us trade,
are you still trading that, by the way, right now?
Not really, because it's look at these small little days. It's not like when you had the expansion type move, but look at this exhaustion top, big move lower. You then had a lower pivot or a lower type wedge here, and it seems like it's breaking to the downside. We talk about how an inbound move usually leads the move again, so that could be happening here on the SLVs. I would watch this 31.97. I think you can easily test it, and then maybe even break. If these metals
all the way down to 26 or something, then, huh?
Yeah, if the metals continue their pressure here, which they've been starting to see some pressure and they're resolving to the downside.